Hello everyone, welcome back to my channel. My name is Aseem Singhal. I am a full-time trader and today I'm going to talk about how to use stochastics in addition to using EMA. So I'm going to use two indicators, stochastics and EMA, because I've seen when I use these two indicators together, I get a very good entry and my accuracy increases. So I'm going to tell you all about that. How do I take entry? When do I take exit? And we'll see some examples as well. But before we go further, as usual, make sure that you like this video and subscribe to my channel. So let's start this video. So let's talk about the rules of this strategy. In this, I use two EMAs, which is a 50 EMA and a 200 EMA. I do it on a 5-minute time frame since I'm only trading this on an intraday basis. And then I also use the stochastics, and in stochastics, I use the general parameter, which is 14. Now, when the 50 EMA is above 200 EMA, that tells me that the stock or that index is going up. So I will only try to do a bullish entry here. But along with that, I also want that both 50 and 200 EMA is pointing upwards. That tells me that the stock also has a good momentum. At the same time, if I find stochastics below 20 and trying to go from below 20 to above 20, that is where I'm actually going to buy, because this might be a bottom fishing trade. At the same time, I want the candle to be green, which gives me again a more confidence in this trade. And at the close of that green candle or at the high of that green candle, I will buy it and I will put the swing as my stop loss. And generally what I've seen, I get a very good risk to reward. I can get risk rewards of almost 1:4, 1:5. So I can either exit based on that, or when the stochastic reaches its 80 level, I can exit then. Similarly, if we see about the short entry, then we want the 50 EMA to be below 200 EMA. We want both the EMAs to be pointing downwards, which shows a negative bias. I would want the stochastics to move from above 80 to below 80. That is when I'm going to enter when I find a red candle. And again, I will put the high as my stop loss. And again, I can easily do a 1:3 or a 1:4 trade. I've seen this working in a lot of stocks, and it also works on futures. It works on index. In fact, I can even trade this strategy on options. Let's see these examples and more details of this strategy on the laptop now. So now let us now see the rules of the strategy once more, and we'll see some examples as well. So as I said, this is a 5-minute trading strategy in which we are going to use 3 indicators. We'll talk about which indicators, we'll see what are the entry and exit points, and then we'll see some bullish and bearish examples. So as I said, we will be using two kinds of EMA, and this is on 5-minute time frame. So that EMA will be 50 EMA and 200 EMA, and we will be using the normal stochastics. We will not be changing any parameters of stochastic. It is stochastics with the period of 14. And here I'm showing you just how to put in the indicators. As I've mentioned, it's the normal stochastics, and then we'll be adding two EMAs which are moving average exponential with the length of 50 and 200. Now let me quickly recap how the strategy works. The first step is that it should be on a 5-minute time frame. The second thing is, if we are looking for a long entry, that means if you're looking for a buying entry, the 50 EMA and 200 EMA should be upwards. So it should be moving upwards, and 50 EMA should be more than 200 EMA. And finally, if we find a green candle, that is when we are going to buy, and we'll keep the swing, the previous swing, as the stop loss. So this can be a stop loss, and then we'll trade for at least 1:2 risk to reward. So let us see some examples of bullish entry. Here we can see we have put in the 5-minute time frame. We have two EMAs added. The red line is the 50 EMA line and the black line is the 200 EMA line, and both of them are moving upwards. So they are sloping upwards. That means this shows that the stock has good momentum on the upside, and we can go for a buying entry. Now what we have to check is when the stochastic moves from below 20 to above 20. So this is where it goes from below 20 to above 20. And at the same time, if we find a green candle, so you can find a green candle somewhere here, this is a good entry. We can buy here with a very small stop loss of maybe the red candle low, which is the swing. So this can be your stop loss. So as you can see, that the stop loss is very small. And then the stock moved very quickly up. So it gave a very easy 1:5 or a 1:6 trade. And again, let's see some examples on the downside also. So in this case, the red line, which is the 50 EMA, is below the 200 EMA line. So it is showing that the stock is going down, and both of them are downward facing, So this gives us a confirmation that yes, the stock might go down. We are again using the 5-minute time frame. Let us again wait, and this time we will wait for the stochastics to move from above 80 to below 80. So this is where it happens. Where the stochastics went from above 80 to below 80. We'll see the corresponding candle, and we can see it's a red candle. That means the candle itself is telling us that high chances that the stock will go down. In this tech, we are looking at Ultratech Cement. We will buy at we will sell at the closing price with the high as the stop loss. So this is a very small stop loss trade again. And we can see that it gave us almost a 1:2 or a 1:3 target in just maybe next 5 or 10 minutes. We'll see a few more examples. So I'm going to first show you a couple of bullish examples, and then I'll show you some of the bearish examples. And after that, we'll look at the charts as well, where we'll see examples on Nifty and BankNifty. So first, the bullish example I'm showing you on Hindalco on again a 5-minute time frame. Let us see if all our conditions are met. The first condition is that 50 EMA is above 200 EMA. So that is true. The second condition is that 50 EMA is sloping upwards and 200 EMA is sloping upwards. So that is true as well. Now let us quickly check the stochastics. This is where the stochastics move upwards and it breaks the 20 line. We will see correspondingly we find a green candle here, or maybe if we find a green candle here, we will buy at the closing price. So this becomes our entry. We will put the swing as our stop loss. So this is the stop loss. It's a very small stop loss. And as you can see, we will get a very good buying entry here. Now there are different ways we can take an exit. Either we can have a fixed exit, which can be a 1:2, 1:3 or 1:4 kind of an exit. Or we can also take an exit when the stochastic reaches 80 level. So in that case, we will take an exit somewhere here. You will notice that if we take the exit based on stochastics, which is above 80, most of the times the profits will be a little smaller compared to the fixed 1:2 or a 1:3 trade, but our accuracy will increase. Let us see a couple more examples. This time I'm showing you the example of United Breweries. Let us see if all our conditions are met. The red line is above the black line. So 50 EMA is more than 200 EMA. So that's true. Both of them are very well facing upwards. And again, we can see that as soon as the stochastics broke the 20 level, at the same time, we found a green candle and the stock went up very quickly. In fact, in the same trade, you will notice that you've got trades multiple times. If you see here, stochastics again went above 20. We found a green candle, got an entry and stock went up. If we see further back, again we got a stochastics above 20, again a green candle, again a very small stop loss trade and stock went up. So in all these trades, you can notice that we are able to achieve a 1:2 risk to reward. In fact, if you try this if you're going further also, you'll notice you've got more trades here as well. So again, the stochastics went above 20. We found a green candle and we found a very good trade, maybe 1:4 or a 1:5 kind of a trade. This is a strategy which I usually like, and I can do it on any stock, or I like to do it on futures, especially Nifty and BankNifty futures, and we will see it going forward. This strategy will also help you to take really quick trades also. So see this is an important example. At this point of time, when the stock was completely sideways, we did not get any entry because the stochastics was not below 20. But when the stock was going to go up, it gave us a very good entry. So this is where we got an entry, maybe at this green candle, and then the stock went up like a rocket. So almost a 1:6 or 1:7 kind of a trade here, with a very small stop loss, So you will notice that since we are using a combination of two very important indicators, a lot of these whipsaw trades, a whipsaw trade is a trade where we end up making a loss. We might be able to skip those trades. Now let us see a couple of trades on a bearish direction also. So let me just remove this. So let me first see a couple of trades on a bearish direction. So I'm showing you Tata Steel. I'm showing you Tata Steel on a 5-minute time frame. Now we are looking for a bearish trade. Why? Because 50 EMA is below the 200 EMA and both of them are facing down. So in this case, we are looking for stochastics to go from above 80 to below 80. So this is where it happens. We find a corresponding red candle also. So this is where we are going to take a short entry with a small stop loss. So this can be our stop loss, and you can see that after the entry, the stock went down very quickly. So again, a 1:4 or a 1:5 kind of a trade that we have found here. So now let us see if we can find similar trades on Nifty and BankNifty futures also. Let us see some live examples now. I am showing you the Nifty futures chart, and I've already added the 3 indicators. So the pink line is your 50 EMA, the blue line is the 200 EMA, and at the bottom we have the stochastics. So let me just increase the screen size. Now let us see if we've got any entry, and again I'm using it on a 5-minute time frame. So if you can see here, since the stock has started to go up, so Nifty has started to go up, and the 50 EMA is above the 200 EMA, we would be looking to do buying entries now. So let us see, when do we get the first entry? This is where the stochastic goes from below 20 to above 20. So we will find a corresponding green candle. This is our green candle here. We can do a buying here with our swing as a stop loss. So this will be our stop loss. So almost, I would say, a 40-point stop loss. This is a relatively larger stop loss. And we can see after entry, the stock went up pretty quickly. In fact, we could have taken an exit here when the stochastics reached 80. So we could have taken an exit somewhere here, which would have given us a 1:1 trade. Let us see if we've got more entries. Again, we've got another entry somewhere here, where the stochastics went from below 20 to above 20. If I find a corresponding candle, which is this, we'll be buying here on a green candle, and with the swing as the stop loss. In this case, there is a very small stop loss, and as you can see, we've got a very good entry again, almost a 1:6 or a 1:7 kind of a trade. So this is how you can get a lot of trades in the single stock only, or in a single index, and we don't really have to track a lot of index or a lot of stocks, because in the same stock maybe we can get in a single day about 3 to 4 entries, and as I've seen, the accuracy of this system is pretty high. Let us quickly check some examples on BankNifty also. Again, like last time, I've put in all the indicators already. The pink line is the 50 EMA, the blue line is the 200 EMA, and we have stochastics at the bottom. Let us look for any short entry this time. So as we know that we can only take a short entry if we have the EMA sloping downwards. So in this case, the 50 EMA is below the 200 EMA, and they are both sloping downwards. So now we are going to look at when stochastics goes from above 80 to below 80. This is where it goes from above 80 to below 80, and it corresponds to probably this red candle here. So we will enter here. So we will be selling here. This will be our selling price, and this will be our stop loss, the previous swing. And as you can see, there's a big downfall, almost a 1:4 or a 1:5 trade, or we could have taken exit based on our stochastics going to below 20 also. So based on that also, we would have got an exit here. Let us see one more example. Probably you can see here, another time stochastics went from above 80 to below 80, and we have a red candle also. That means we can take a selling entry here with a very small stop loss, and we have been able to get a decent trade here, and we could have taken exit based on stochastics also. So as we can see in BankNifty as well, that we can take exits not just based on a fixed risk to reward, but also based on stochastics going below 20. So I hope you like this strategy. I hope you understood how I use stochastics with EMA to increase the accuracy, and we saw a lot of examples. Initially, we saw examples on stocks, and then we saw examples on both Nifty and BankNifty, and we saw that a lot of time, most of the time, we get very good entry, and even if my stop loss do get hit, the stop loss point is very low, and because of that, even if my 2 or 3 stop losses get hit, a fourth trade, because it can be a 1:4 or a 1:5 trade, will take care of all my previous stop losses. If you like this video, make sure that you smash that like button and subscribe to my channel so that you keep getting such videos. Thank you, and I'll see you in the next video.